Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, brace yourself for Jeremy Grantham's vital warning. Collapse is coming, but it can make you a millionaire. Stay tuned, this is truly a game changer. Jeremy Grantham, a recognized market authority, imparts a compelling message that combines financial prudence with strategic opportunity. Drawing upon his esteemed reputation as a seasoned market predictor, Grantham issues a stark warning regarding the impending collapse that looms over the U.S. stock market. His insights serve as a priceless resource for safeguarding your wealth. Furthermore, Grantham's distinctive viewpoint not only anticipates the forthcoming collapse, but also unveils the potential for astute investors to thrive amidst the ensuing turbulence. Let's delve deeper into this critical discourse. In a recent exclusive interview with David Robinstein on Bloomberg Wealth, Grantham shared his insights and predictions, which have sent shakewaves through the financial world. Grantham begins by emphasizing the gravity of the situation, stating that the U.S. stock market appears to be teetering on the edge of collapse. His track record for predicting financial disasters is well documented, and his latest prognostications have raised alarm bells among investors. In a market where optimism and rosy projections are prevalent, Grantham's perspective stands out as a cautionary tale. He points out that the United States has been in the grip of a significant bubble, particularly in 2021, which he characterizes as one of the great bubbles. Grantham believes that the current phase should be a deflationary period, during which the bubble gradually deflates. This deflationary phase, according to Grantham, hinges on several factors, including the potential decline in corporate earnings, a decrease in profit margins, and the looming possibility of an economic recession. Grantham goes on to forecast that the recession could extend deep into the following year, potentially coinciding with a decline in stock prices. His perspective suggests that the effects of the bubble have not fully dissipated, and there may be ongoing economic and market challenges in the near future. Well, before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and hitting the notification bell to stay updated with our latest content. During the discussion, Grantham expresses skepticism about the Federal Reserve's ability to accurately predict and respond to recessions. He criticizes the Fed's track record, noting that it has consistently been wrong in its predictions, especially regarding recessions that follow major financial bubbles. Grantham implies that the Fed has a history of being overly optimistic and taking credit for stimulating economic bubbles while neglecting to acknowledge the deflationary impact when those bubbles burst. He waves a caution flag, warning investors of potential trouble ahead, even when others are feeling confident. Grantham also addresses the recent debate about the state of the U.S. economy. While many on Wall Street, big money investors, and former Federal Reserve officials have been suggesting an economic slowdown or recession for almost 2 years, recent developments have introduced a degree of optimism. The strong job market and easing inflation due to the Federal Reserve's aggressive interest rate hikes have led some to believe that a gentle economic slowdown is possible. However, Grantham cautions against heeding the optimists and the Federal Reserve's economists, implying that they have a history of being overly optimistic. He suggests that investors should be prepared for a different economic landscape, one characterized by moderately higher inflation and interest rates. Grantham delves into the relationship between interest rates and asset prices, simplifying it by explaining that low rates tend to drive up asset prices, while higher rates have the opposite effect of pushing asset prices down. He anticipates an era where interest rates will average higher than they did over the past decade, potentially impacting asset valuations and investment strategies. When asked about why people often cannot resist participating in bubbles, Grantham points to human psychology and social dynamics. He highlights the role of FOMO, or the fear of missing out, which drives individuals to join in when they see others profiting and getting rich in a bubble. He also discusses inflection points, critical moments in a bubble's development when a significant number of people become bullish and stop considering fundamental factors. Grantham's reputation as a predictor of bubbles and his ability to recognize when markets are out of kilter grew largely from his writings, particularly his quarterly letters. He began these letters in 1998, coinciding with the dot-com bubble of 1999, during which he took a contrarian stance. Despite their caution, the bubble continued to inflate, leading to a challenging period for Grantham and his team. He acknowledges that they were early in their warnings and that earnings were rising due to the bubble's ascent, which contributed to the market's remarkable climb. This contrarian approach led some clients to disapprove, and they faced significant client departures. However, Grantham's firm managed to navigate the challenging market conditions of 2000 to 2002 without incurring losses, achieving positive returns. Grantham notes that despite their subsequent success, none of the clients who had pooled their investments during the dot-com bubble returned seeking the same product. This highlights the challenge of regaining client trust once it's lost, even if an investment strategy ultimately proves successful. In conclusion, Jeremy Grantham's advice to avoid the U.S. stock market is rooted in his belief that the market has been experiencing significant bubbles, and he anticipates a deflationary phase ahead. His skepticism about the Federal Reserve's ability to manage economic conditions, coupled with concerns about inflation and rising interest rates, leads him to offer a cautious outlook. Grantham's perspective serves as a warning amid an environment of optimism, suggesting that investors should be prepared for potential challenges in the financial landscape. Thank you for joining us today as we explore Jeremy Grantham's final warning about the impending collapse in the U.S. stock market. We've covered some crucial insights from a seasoned market predictor, and now we want to hear from you. What are your thoughts on Jeremy Grantham's perspective? Do you agree with his warnings about the potential collapse and the challenges ahead in the financial landscape? Or do you have a different viewpoint? Share your insights and opinions in the comment section below. Your perspective matters, and it's valuable to have a diverse range of opinions in the world of investing. Well, that's it for now. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring the notification bell to stay updated with our latest content.